Hey Adrian, Andre, how about a sound check here? Yeah, crazy day, huh? Yeah, I've got the Runa going. I got a lot of stuff to do yet tonight after finish the broadcast. Get started here about 1 minute, folks. Welcome everyone to the Kendall Report. It is Monday night. I kind of pumped up tonight's broadcast tonight because we're looking for a confirmation of the big reversal I've been talking about going back, I think, probably a couple weeks, but last Wednesday night I did a pretty big rant on what was setting up, and we'll just say we didn't get a full confirmation, but I'll break that down here in just a few minutes. So we saw quite the rally yesterday. S&P up 1.9, NASDAQ up 3.4, and Russell up 3.1. So what I have to ask you, what changed? Why? Why did that happen? And a lot of it had to do, excuse me, a lot of it had to do with just the window dressing in the month activity that came in. There was quite a bit. I mean, even Kathy Woods got almost a 10% run on ARC. And so, everybody was buying, rebalancing everything for the beginning of the new month. But what's changed? Absolutely nothing. The Fed is still going to be tapering. We're still going to see higher rates, even though when you look at yields, you wouldn't think that's what's going on. I'll break that down here as well. But nothing's changed, but the markets rally in this crazy mode. I think for the most part, what we're seeing is some resilience as some of the secular trends that are out there are still very, very robust. And I've talked about this off and on over the last several weeks. And even last night I was talking about, I thought we could rebound and possibly rebound back into 21-day moving average and maybe back above 4,500. Didn't think it would do it on Monday, but it did. So that's all that counts. We saw pretty good volume across the board. Everything was a robust day to say the least, and one-sided trade. And we did see a lot of machine/algos out there trading today. So it was quite the scenario. I don't think anyone at the moment cares about the news. Maybe we've got ISM manufacturing. We have JOLTS, the job openings coming out. I think they were at 10.6 million. I don't know what anyone cares about anymore when it comes to these markets. We'll have ADP on Wednesday, some other reports that I covered last night, and ultimately employment at the end of the week. But overall, nothing's really changed. I guess maybe the rhetoric around this silly ideas around the Ukraine and that situation has calmed down a little bit. Seems, I guess, that had some effect maybe last week. But what we saw last week, just to talk about that a little bit more, then when I get into the technicals, I'll talk about what happened today from the standpoint of that monthly reversal and all those things. But what we saw last week was really after Monday's action. There were only 2 days that we traded above the highs of Monday, and that was Wednesday and of course Friday, where we saw that crazy short covering surge. And I think that was probably the first signs of the window dressings coming in, getting a little head start, and then we saw this crazy rally, especially in the markets that have been hammered down, right? So things like ARK that have been beat down. It printed $65 last week. I had talked about it hitting 65 going back last November, and I was told I was wrong about that. So we printed that, but we saw everything. The NASDAQ, the Russell had huge rebounds relative to what went on in the S&P. I don't really follow the Dow Jones. Some folks asked me that in the commentary in the comments on YouTube. I just don't follow it. I haven't followed it for probably, I don't even know how long, 30 decades. I just never seen any real use for it. And I realize a lot of folks do trade it now, but that's not something I cover on a regular basis. But as far as the configuration goes, the title of this video tonight is "Will the Rebound Continue?" And I still think there's a little bit of upside, and I'll cover that. But I don't think I think it's one of these retracement rallies. I don't think we're out of the woods yet. I mentioned last night I saw some upside in the market, but I think we still have to come back and at some stage trade in a configuration that would suggest that we're retesting those 42.12 lows that we printed last week. That retest, and I'll go through this more in the technical section here in just a second. It really has to do with just a solid, good retracement, 50, 60+%, or maybe signaling a new low. So we'll wait for that. So let's start to dig into the database here, which one of the reasons why I was a few minutes late coming up tonight is because of the database. A lot of times in these big days, that when we have these huge days, what will happen is, for whatever reason, our data vendor is delayed getting them. So the database was still running. I was ready to go a half hour ago, but the database wasn't ready. So let's talk a little bit about what we saw. Let me zoom in on there. So we went, in yesterday's report, we were at 14.44% bullish on the daily models. We upticked to 20.84%, so we saw 1,757 buy signals and only 74 sells. And this is significant. There's also something else that's significant about this report, and that we saw the bulk of the buying coming in our 3.2 model. And I know that doesn't mean a lot to you, so let me explain just a little bit what that really is. The 3.2 model has a filter there. It is usually the last model to buy. It will lag a little bit, especially after a steep decline like we saw. But getting that kind of recycling and new buying coming in is pretty significant, suggesting that maybe there's a bit bigger bottom than you think. And let's face it, the markets always seem to go, there's an old saying, the markets go in the direction that it can harm the most people, right? And so what we're seeing here, for the most part, and I've talked about this for weeks now, our models are still on an intermediate basis. We're only 15% long on a bullish basis. So we have a lot of cash hanging around. On a short-term basis, this is what I've been waiting for, and I'll be going through some of these ideas, looking for new sector ideas and things of that sort. Energy still the only sector that is long, and we're not seeing any new rotation on a sector. So the way that the database will unfold is, number one, you start to get traction on some of these stocks that come into play. Then the next thing we'll see is starting to see some rotation into some new sectors, and the sectors will start to bottom. And that sets up, there's a whole pattern if you think about it. We have the short-term patterns and we have the longer-term trends. So the short-term patterns have to set up these lows, and we'll see if we can get any kind of real traction here. This is no big deal, actually, from the standpoint of the database, although it is encouraging. And I'm going to be looking for some of these stocks that are turning around here, seeing what we can do. That I set up everybody in our live trading room. That's one of the things that we'll be looking at probably on Thursday's session, just trying to find some new ideas from that standpoint. But I really think that what we're likely to see here is a little more grinding from the database viewpoint and the metrics out of our database. 22% is actually a negative number, and we're likely to get up maybe to 22 to 28%. If we stay in that range, all that means is we're getting some cycling. There'll be some good short-term trades, but it'll have to maintain that for multiple days, and probably for maybe into next week, next Friday, we'd have to see some stability, stay in the market, stay above some of the levels I'll talk about here in the technicals here in a few minutes. But we'll have to start that process over. And these are great points in the markets, because we did see NASDAQ basically come, I think, just a touch shy of doing a 20% correction. So we'll find out what's next, whether there's going to be a grinding and a resumption of some sort of pattern that will move to all-time new highs again. I know that's not something that's very popular to talk about right now. Everybody got pretty bearish out there. But from the real terms of what I see going on in the markets, this is what I'm watching. You guys know I'm data-driven. This is what I'm watching, just giving you a good setup here from what is likely to happen from the database viewpoint and what that will lead and how it will lead to other events in the markets and maybe a sustainable recovery, maybe a full retracement, all of that stuff. So let's go ahead and let's start to take a look at some of these things. And I think what I'm going to start with tonight is I'll start with the monthly, because that monthly reversal was something really big that I talked about. So let's go ahead and just set up with this scenario from what's going on here. So what we're seeing here is we traded down to this 42.12. Let me get the cash number here. That's the futures number. Let me bring that cash number up real quick. On the cash, we printed to 42.22. A lot of twos in there. And the rebound back to the close today at 45.15 finished almost exactly in the middle of the range for the month. So we traded, I think it was 50, I figured out the retracement is 50.7. Typically when I see an outside bar like this, I like to see it close in the lower 40% or a 60% range to the downside. And what that really means is we would have had to close to get that number 44.49, and the minimum number was 44.89 is the number that I talked about last night. So it turns out that this ends up to do two things that I discussed over the last, let's say, 2 or 3 sessions here on the streams, is that we're seeing it looked like we were going to get an STX buy signal. Well, we ended up not getting that. The STX for the monthly last month was 44.90, and we closed at 45.15. So we did not get an STX buy. So, and you'll also notice that the grid has turned down. There's an angle down here. So now just S1 is 44.29. This is monthly or on the secular level. 44.29. 43.33 is S2. And now we get into the serious stuff. S3 would be that retest 42.37. And then STX now for this coming month, 41.51. The other thing that's happening here, you can see here, is that these PPMs have all turned down. And we were huge numbers. We were well over 3.0 just a couple months ago in the middle of this rally. And so what sets up here is it's still possible for the market to come down, the prices on the market come down to the 21-month moving average. They're at 39.42 right now. That is still possible from that standpoint to come down to that, but that number is rising. It will uptick tomorrow when we start trading. This doesn't update yet. I can bring up the futures and give you a number on there, but we're going to see this around, I mentioned this number last night, around the 4,040 to 4,060 level. And what that means is that number is going to go up the next couple months. So getting this neutral close and not getting a confirmation of the outside bar doesn't mean that the market still won't decline in the pattern that I was talking about, but it does set up more likelihood of a sideways range trading between these inside of this market grid numbers here. And let me bring that on screen so you can see that just a little better here. These are going to be important numbers to watch this month, okay? So what we're looking at here is this is the cash, not the futures. So cash, S1, 44.29. That seems pretty likely. A move down to 43.33 is what I was mentioning in the opening comments, that we would get a material retracement down toward this 42.22 lows that we printed in the month of January. So my expectations will be just to probably do R1 4601. That put us back to 460 handle, and then maybe an S2, R1, S2. We'll see how that works out for this month. And that will set up a sideways pattern. So when we get into March, I'm going to look forward to March and anticipate what will happen on the market grid. A lot of times it'll flatten out. It'll just go into what I call a box formation. So it stops declining. If we close just a little lower, a little higher, it'll just go into a box. And then we set up probably a multi-month sideways pattern. And that was the original pattern that I talked about. If you're a regular watcher of this stream, that's what I've been talking about, is ultimately we go into a broad sideways range. And so that's my expectations for right now. So let's go ahead and come back down to earth and start talking about some of the short-term movements that we saw yesterday. I'm going to go over to the futures now. We'll go to daily. Now, yesterday's range, which was impressive, I didn't think we could do it. We actually got up to R2. Yesterday, 4460 was R1, 4501 was R2. We printed 07, printed right into that range. Now what we're looking at overnight now is that 4470 is S1, R1 4538. The target is going to be for a move up toward the 21 period moving average. That's currently at 4555, and that's dropping. The rate of change has slightly increased. It's at a minus 0.31. So just know that the 21 period moving average is still in a downtrend. So I'm going to draw in a couple patterns. That may take me just a little bit to get through this first section, and pretty much everything I'm talking about here will apply to the NASDAQ and the Russell, more so NASDAQ and S&P. Okay, so you can apply these basic ideas and concepts that I'm going to talk about tonight just into that level. So this downtrend is still on the 21. We'd have to get back above a 0.15 or 0.31 right now. It actually, in spite of this yesterday's action and being down just 0.5% tonight, we're looking at a downtick in the 21 period moving average. The other thing that's still happening, and I talked about this part as well, is the 10 period moving average is actually crossing through the 200-day, and that right now is 44.21, and the 200-day is 44.22. So we just crossed through that. There's still a downward slope to the 10, but we are seeing it starting to turn up. And I talked about this, I refer to this as a bubble formation here on the market grid. It blows up when you get some increased volatility like we saw last week. You get the bubble, and they tend to be lows. I'll just put a cursor here. You'll see there's a couple. There was one back in December, right before we rallied into new highs, and there's actually one back over in October as well, where we get just this, and they tend to be a bottoming pattern. Whether they can sustain themselves, this is a slightly different thing. So let me draw in a couple patterns here that I think will be important to understand as we go forward. So the pattern that we saw unfold, this was interesting. We went through a calculation in the live room today, and this move down that we got into this low of last week was basically, this length of this move down was about 1.382 times the length of this first move in this pattern. So from a Fibonacci viewpoint, it was almost a perfect pattern is set up. Now what we're setting up is another little inside 1, 2, 3, which is probably an ABC, because we're still in these downtrends. They're the two scenarios that we're going to have to watch for, and this should be fairly simple to call if we get these breaks. But one scenario would be, this would be the retracement rally. I can go through some. I'll probably just keep going here because I'm kind of on a run here with this pattern. But somewhere you get a retracement. I'll just draw a line. This is a random line, but we get a retracement up into here, maybe into this level here, and then the next leg down is down, and you re-challenge these lows, all of that stuff. Like I said, we might just get a retracement back into 43.60. The number 43.60 would be the number that we would look at on the downside, and that's relative to the numbers I just showed you on the monthly. So this pattern would set up, and we would know probably should not exceed the 21 period moving average. If we do, we could go all the way to that R1 number on the monthly I just talked about, up towards 46 handle, somewhere up that way. So there could be much more on the upside. It's too early to pinpoint and make a decision here, just based on what we're seeing in the rollover on the monthly and some of the other elements that are out there right now. But this is one of the potential patterns, and like I said, the best case would be that we would retrace down into the mid 43 handle, be a material retracement, and I'll take these lines off and I'll draw in the next scenario. The next scenario would be that we get this retracement out, and then we would have another leg up. What you're going to end up with, no matter how you do it, up at this level somewhere in maybe mid 47 handle, something up there, even if you trade it up there, you're going to have monster amount of resistance here. And if I'm going to continue down this path. I'm too deep. I can't get out right now. So what I want to do is just play out this scenario just a little bit further. And what's likely to happen, let me take this off, and I'm just going to, this would be the pattern that would be likely to set up here. So we would end up with a pattern that basically is like a zigzag, a double three pattern, something in here, and we would, the extremes would be up here in the 47, mid 47s, and downside would be in the 43. 43.60 is the bottom end of this grid level here, but something like that is what we would end up looking like, and it would just be a big chop. So the second that I can put some kind of probabilities on this thing, what's going to be great about this is going to give a lot of trading opportunities. And so the second I can figure out whether we're getting this retracement rally followed by maybe a new low, maybe printing down to the 21-month moving average, that's what I'll be paying attention to, and the structure of the markets. And I preach this a lot and talking about in the live room. You want to have enough structure to make some ideas. We got plenty of structure last week. We got all of those back and forth days, and we saw a lot of action overnight. And this is another scenario. It's almost like I would say probably 2 or 3 days last week, most of the activity we saw was overnight. They were even up really big or down big, and they recovered by the next session's end. So we're seeing that whipsawing back. So yesterday was just more of that pattern setting up. Okay. So let me just, final thing I'll talk about, let's just set up the range for today. I think just looking at this is the daily futures, maybe 45.38's R1. I think that's a stretch. Actually, we could see that would put us right into that 45.55, right into that 21 period moving average. That would be interesting to see that happen. The thing that is happening is PPM1 is turning up, and it's got through its first, second derivative. So I'm kind of leaning toward some kind of consolidation between 44.21 and this 45.55. So it's the best I can come up with tonight as far as expectations as we go forward. Okay, so let's go from here. The next market we'll go into is the NASDAQ. NASDAQ is trying to climb back to its 200-day moving average. This looks like it's going to hit also the 21. Now, we saw something interesting, and I've talked about this a lot, that the NASDAQ has been leading the way. So we saw that crossover of the 10 on the NASDAQ, the 10 through the 200 back on 125, and we've stayed below the 200 here multiple days. And that's going to be your challenge now, is the 200-day moving average is 15,031, and we've got the 21 period moving average coming down. It's at a minus 0.52, so there's only about a 30% probability right now to get above 15,134. That should be a point to look for a rejection or something if you're doing some short-term trading. But the expected range today, if we did do an R1 S2, would be 15,041, S2 14,615. So that would be pretty, I would say that would be likely just based on the volatility that we've seen the last couple of days. I mean, we saw an insane, just looking at composite, we're up 469 points on the composite. And so to expect a range like that would not be unlikely. So I'm going with the R1 S2 there. So going to the Russell Cash, we were able to close over the 10-period moving average. And it's interesting because now the Russell is starting, we haven't even looked at that spread for so long because there hasn't been any relevance on that. But the Russell is actually starting to look like it's trying to make a potential turn here. But it has all the same elements. The 21's still declining, 21's in a downtrend, so we could get up to as high as 2111. That number is coming down. It's probably closer to 2080 to 2100. We get up in that range, you should see a rejection, maybe a right shoulder put up, and that's where the points where we're going to find out what type of pattern is going to unfold. And I think it's going to take probably, just in the structure, probably another 3 to 5 sessions to really put a handle on what's likely to happen. But we should at least set up those ranges similar to everything else. 2011 is the 10-period moving average, and 2111. So you get about a 100-point range in there that the market should set up some kind of configuration in. We'll see how that all plays out. Let's haven't looked at this spread for a while. So this is the Russell versus the NASDAQ. So not much to look at yet. We just continue to kind of consolidate down here. So there's no real, looks like there's any lead because the NASDAQ actually outperformed yesterday. Let me get off screen here. You can see that from the action here, it just looks like it still wants to underperform the NASDAQ. So there's still a lot of structural issues here from that viewpoint. Okay, so we're midstream now. I'm going to go through the 10-year. I'm going to go from there to crude oil, gold, and Bitcoin, and we'll get through this session tonight. So like I said, one reason why we got a late start was because of the database. So let's go ahead and get into those markets and take a look at what's going on from the configuration here on the 10-year. This is starting to be somewhat of a broken record here. If I come up here and we go to the weekly chart, what we're seeing here is we're just hovering right along the 200-week moving average, which is declining. We're just continuing to stay in that pattern. I think that's going to continue to be resistance. It's still possible. I know this is going to sound a little bit crazy, but it's still possible to trade down to about 168, as low as 164. And, you're like, wait a minute, Bob, I thought rates are going to go up. Well, they are, but the rates are going up on the short end, and this yield curve is still an issue. We did see a very minor steepening yesterday, but that's going to have to change way more than what we've seen so far in this pattern. But this is the point where we're going to see probably a cap around, I think we printed as high at let me get those exact numbers here. We printed as high as 188, 187.4, and now we're back at 178. So there's some decent potential just looking at the weekly, looking at the market grid here. There's some potential of getting down to about 171, 168 in here. So there's just not a lot of upward pressure here. The trends, underlying trends, are still for higher rates, but right now we're in that consolidation. We saw a similar pattern if we go back to February of 21, like a year ago. We saw this same thing. We had this great trend. All of a sudden, it started to roll over, and we moved all the way back to 112. Maybe you remember that going into last summer. So here we are back at those levels again. I was talking about going to the 200-week back a year ago. Now we've dipped, and now we've actually exceeded it, but we're trading right around it. So I still think there's going to be some sort of backfilling here toward those numbers I just mentioned. So let's take a look at the yield curve here. My favorite's the 530. 530 turned up. It's at 0.84, but it turned up from 0.46. Okay, so it's up 2 ticks. You can see the massive decline here. This is still a worry, and until I would think we're going to have to get back over 0.7, maybe as high as 0.8 to get this spread out of trouble. Maybe we'll see some consolidation similar to what happened over here. And I've told you multiple times now that the critical level from the standpoint of this spread is going to be those lows that were printed back in July of 2018, which is 0.20. So if we get through 0.20, that's going to signal, in my opinion, probably some sort of recession and some real slowing down and in the economy. And I talked about this for a number of months, that I expect to see the economy hit a wall. Maybe we're hitting a wall. We'll see what kind of numbers we get out of unemployment numbers and all of that stuff. But it is interesting that the Fed, in their comments and in Powell's conference last week, that I think two things stood out for me is that they didn't seem to be concerned. They seemed to be committed about raising the rates. And in spite of what maybe is going on in the economy, I think they're comfortable with this for some way. And maybe in the end we find out maybe they're smarter than we think they are, but right now they don't. They look more trapped than smart. And I think that's one of the things that we'll be watching over the next several months. But this spread to me is the easy place to watch. And I like the 530 because it actually reflects the internal cost of the banking system, not the 210s. The 210s are kind of a mainstream measure, and I just don't see the same value just because I worked with these banks in their big trading rooms and running the actual real portfolio at the bank, which is the proprietary in-house, the real capital. And that's the 530 is what they're watching. Trust me, that's what's going on. So let's go ahead and move forward to the Crude oil next. Yeah, crude is just running on this rampage rally. And we continue to print. Last week we printed up to 88.84. We got to 88.57 so far today. And it looks to me that the momentum is starting to accelerate even more. So still looking for 95 to $100. And as I mentioned when I was going through the database right now, the only sector that's still long is the energy sector, and that looks like that's going to continue to be in play. And what I want to watch for from the standpoint of equating this into maybe stock trade, we need to see what happens with this next rotation, and from the energy sector in the stocks, which I'm watching, and then ultimately, I was just talking to you about the database and the rotation there. What we have to see in that rotation is see what sectors, if any, actually emerge and start to show some traction and actually give at least a preliminary look of a potential uptrend to start to form. And the way that our database and our models work, there's certain configurations that have a high probability of price appreciation, and it depends on the setup. They're always different. In 2020, we actually got major buy signals coming in 3 days after the lows printed. We'll see how this one sets up. We got down to 14% bullish. We're now back to 20. Looking for, like I told you earlier, looking for some kind of positive rotation. Start to look for, are there sectors or even industry groups? I didn't go that deep, but we do have everything broke down even by industry group, so you can see where there's some micro rotation. Sometimes the industries will lead to the sectors that are going to come in. So energy still looks pretty good to me. I don't see anything that's going to stop this at all right now. In fact, you just look across everything. Even natty gas was up 1%. Everything just keeps rolling to the upside here. And then you see just everything that's going on in Europe, and some of you are there and you know what I'm talking about. So that we're just seeing this energy crisis really start to accelerate. And it's interesting because we have this Alaska pipeline thing, and they've shut down ANWR, they've shut down a whole bunch of stuff. So it's absolutely ridiculous what's going on from the regulation viewpoint. We'll use that term. Next market, I continue. I'm staying fast with my friends in the gold. We got that ugly week last week, closing back under all the averages. What's interesting, the same old pattern is unfolding here. We're seeing gold absolutely just turn up on a dime. This is the weekly PPMs that we have here. And PPM 1 and 2 turned up immediately on this little rally that we saw yesterday, which was, I think, about, I don't have the actual numbers now because we've rolled over, but I think it was about $14, $17 on the upside. So we're just seeing, with almost no movement, PPM starting to move up. Matter of fact, PPM 1 is positive. PPM 2 is at 0. So once again, the same numbers that I'd been rattling about for a month and a half or more is still in play. We're looking at it now 1813. It was 1818 last month. So we're want to get above 1806, 1813, then we start to look at the potential of going back and retesting the 1856 highs in the pattern that was generated last week. But it's interesting. We can't we can't rally this market and we can't break it down. It just stays in the same range. We can go all the way back to June of last year, and we've just been going in a sideways range. We had the big flash crash on that Sunday night back in August of last year, and since then it's just been chop. The highest that we got to was up to 1884. The recent high was 1856, and so we just continue to be locked in this range. So it's one of these patterns that is very difficult, very frustrating, and there's nothing there. I do want to look, since we're on a monthly rollover, just want to look at the secular trends. Man, I've talked about this so much in the last literally year and a half. This pattern that's setting up is still a very bullish pattern. There is some weakness showing up. I talked about this the other night, but from a standpoint of just looking at the market grid viewpoint, S1 1774, that's still a possibility here. 1818 is R1, so basically that same number we've been talking about needs over R1, and then the 1838 level is the breakout point. It looked like we were going to pull that off last month, but it didn't happen. Just literally failed in the last week actually of the month. So let's go over and take a look. Final market will be Bitcoin. And this is interesting because I've been talking about the potential for a bottom. We've actually got over the 10-period moving average. That number right now is at the 37,066. We're heading, looks like, towards the 39,850 level. Still think there's going to be some consolidation. We're seeing a little bit of a contraction of the volatility on a daily basis, but the PPM1 is cutting through its second derivative. PPM2 has done exactly the same thing. So we're seeing the beginnings of a bottom. And as I mentioned last night, we traded down into that 32 handle. If you recall, going back a couple of weeks ago, 34 to 28 was the actual target, and then there on the daily, I don't have the Fibonacci projections up here right now, but there was a projection right to almost exactly where we went. It came about $400 from hitting the exact fib number that I was looking for. So this could set up a really interesting pattern and maybe move back toward the 200 period moving average. And that's up at 46,822. But we're looking at a minimum of probably another 4 to 6 trading sessions to get to that point. So the good news is we trade every day on this one. So we could be there by as we come into next Monday. So we'll continue to watch this pattern. I'll just go to the weekly, some final thoughts here. And weekly, we've traded up R1 38,464. The high is 38,749. R2 here is 40,185. That would be the extreme. So far, we've had a low of 36,852. S1 35,386. So it looks like to me, and we're seeing the same pattern here, that the weekly chart is setting up where we're starting to see the PPM start to bleed off some of this massive downward pressure that I've been talking about. And so that 10-period moving average, I've talked to you about the rising 10. Well, this is the declining 10 in the pattern. The 10 is about to come into the market grid area, and it is dropping pretty substantially. Now, this chart updates Sunday to Sunday. So these are the new numbers. Let me put them on the screen so you can see them. Go full screen so you can see them better. But we're looking at, from a grid level, 35,386. So we haven't quite printed the S1, R2, probably R1. We've already printed R1. look for maybe an R2 40,000, but the 10-period moving average is dropping right now about 2,000 per week. That's going to push us right down to the 41, 42 resistance areas that I just discussed. Okay, folks, that's going to do the video for tonight. Thanks for your patience getting a bit of a late start, but there was a lot to cover, and hopefully you found a lot of value here. And please subscribe and make sure you check out some of the offerings that we have. You can join us at the live room, and that's Kendall Report /trade. You can do /WaveTech and /expert, which is just a no E, but XPERT, and you can find out about all some of our products that we offer. I think they're going to be real useful as we come into this new rotation that I talked about, because I think we'll see the markets actually, as we start to get some traction on the database, if that's what's about to happen. And once we get over like 0.28 on the short-term database, things will get pretty interesting, and hopefully we'll get some sector rotation. So thanks again for watching, and I will see you tomorrow night, same place. I'm not sure exactly the time right now until the database gets updated. So have a great evening. Have a good day trading for tomorrow, and I will talk to you tomorrow night.